Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 3 o'clock in New York on Tuesday, 18th day of February 2014, and this is the daily report for gold and silver. Aside from silver right now, we do have the precious metals lower, although well off of their lows this morning. As you can see, current print, call it roughly $13.23 on the day, puts it off $5-6. Low $13.12, high $13.26. Silver also took a dip this morning, but is currently trading up about 9 cents on the day, 21.25 on the low, 22.05 on the high. Current print, call it 21.89 and change. We'll talk about silver towards the end of the show. Traders, we are looking at a 240-minute, 4-hour chart, standard candlestick format. And if you recall, I believe it was yesterday morning, for me it was actually Sunday night, when I put out a special trade alert saying we had a potential top, short-term top in the market, go ahead and to raise your stops. This is one of the charts that I was looking at the time, and I also put in just a straight horizontal line, and the horizontal line that I put came in right here. I believe that's about 13.29. That was our projected top from a couple of weeks ago. And although we're well off the lows, and I feel pretty solid about this right now, we did see the market come up. There's no doubt. Some resistance has come into the market because it came off of those highs, went to a low of 13.12, and as you can see, is now trading off those lows and moving a little bit higher. Now, what are we looking at right now, and where could this market kind of drift to? Or have we seen the end of the drift? And we'll try to talk about the ramifications and the possibility, two different models that we'll look at, and we'll explore a couple of fib retracements all on today's daily report. So the first thing that we want to do is we want to try to make some kind of sense of this recent move down in terms of fib retracements, see if there's anything that kind of lines up. And all I've done is this: I've kind of extended or blown this chart up. I've put in one fib retracement, and this fib retracement takes us from this bottom roughly at 12.39 to the top. You can see this top here, 13.30. So this $100 move, we've got this top at 13.32. When we do that from here to here, and then we look at our first retracement point, that's 23%, that's 13.10. Our low today, 13.12. So it actually has fallen into alignment with one potential. Now, we have placed our stops really under 1300, and the rationale behind it, 1397, let me line this up as straight as I can. There we go. 1390 or 1297, excuse me, is a 38% retracement, and the attempt was to kind of put them really under these particular lows right around here, but keep it fairly tight. That's my reason for under 1300. Depending on where you put it, you're going to put it anywhere between 1298 and as low as 1292, depending on what kind of flexibility you want to give your stop. However, the whole rationale was that we should literally hold this $1,300 mark as a psychological level, and then we have some technical support starting at around, call it 1297 in this band here. That being said, at least for the time being, we have effectively held above 1300. We have this intraday low now at 1312. That's going to become a new mark because, of course, as this market comes down and as it moves back up, which we have seen right in here, this then becomes the support level because in terms of an intraday low, that's what we're looking at. So I think effectively we were correct in assuming that we had a potential top in the market, because we certainly have seen the market come down from that price point. It does appear right now that at least for the time being, this intraday low at around 1312, we'll see if that holds. I'm still going to say keep our stops below 1300. For conservative traders that want to really keep it tight and didn't pull out at the top when we said we had a possible top, the only suggestion I can give you is to trail your stop up tighter and maybe trail it up just below 1310, maybe 1308. It's not that much more. It does have a chance of, if we get any kind of intraday volatility, of getting hit, but at the same time, it will lock in more profits. Of course, you're in anywhere between 1258 and 1266 on the long side. So I want to take a look at this current price high that we've gotten in terms of a daily chart, and we're looking at our daily chart. This daily chart also has our intermediate count as well as our sub count. Intermediate count, of course, 3, 4, 5, A, B, C. There's a couple of different models that I've had. This is where we had the going back in the impulse, but we failed here. That started our bear count, 1, 2, long 3, 4. And as you can see, I believe that this double bottom has really pointed out the fact that we've most likely completed our fifth wave. We are now in a counter trend. That counter trend really was confirmed once we broke above this long-standing resistance line. That's right in here. No doubt we did break above that. So now what we're trying to do is simply match up where we think that this A could go to, because if we're in a counter trend, and I have no reason to believe that we've gone into a full-blown bull market yet. I'd like to believe that, but the technical evidence isn't there. We're probably going to see something like this. An A, wherever this falters, we're going to get our B wave and then our final C wave. And as I said, I believe that our C wave should move us into about the $1,400 range. The top being at around $1,435, which is this particular top here. Now, if we see this market have the energy to kind of barrel past and move above this top right here, well, that tells us something, and that would be the first piece of evidence that I would look for to say that, you know what, we've gone into a bullish scenario, and rather than what we're witnessing as simply a counter trend, what we could be seeing is a return of the bull. Much too early to tell, but the signs that we would look for are going to be the same in a counter trend as well as in a bull rally and a bull count. So until we hit certain parameters, it could be either, but in either case, whether it's a counter trend or a bull trend, it does signal higher prices. It does signal a rally, but it does signal that rally, as I said, with some sort of an A, a B, and a C. So we are going to get this little dip in the market, or we should, I will say, we should get this little dip in the market, this being our B and then our final C up. And as I said, in terms of termination, I'm going to look at around 1435 because I'm basically basing it upon the top of this wave 4 right here. So what about silver? We're looking at a weekly chart, and there's no doubt silver has absolutely broken out. We talked about the fact that it was trading in this narrow band, and the narrow band that I'm talking about is in terms of the lows and the highs right in between these 2 points. And that was really the overall characteristics of the market. But we have seen it break out over the last week. It's broken above. We have a couple of different resistance points, and my sense is this. If we are going to see what we're seeing in gold, which is we had that spike up, we had a potential top. Now, although silver is down today, if gold begins to fall, I think silver will fall with it. And in terms of positioning, we'll want to then enter our trade as close to the conclusion of this B wave, if that's what we get, before seeing the market return higher. And this is where we want to initiate and get long silver. You can begin to scale in if you have the flexibility to weather any kind of downside move we have. And this would be good in case we don't see a downside move. In other words, if what we're witnessing in the market, if this market gets so strong that it has those shallow retracements, and what I mean by shallow retracements, of course, is like the 23% that we pointed out in silver. If it doesn't go to a 38% or a 50% on that retracement side, it's showing us a real strong market, and we'll probably see this market break through 22. I'm showing resistance if it does do that at 2360. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.